everyone, it's Maureen Lein, your local lender at Rate, and welcome to this week's Mortgage Minute, where we break down what is happening in the market and how it impacts you. So today is Wednesday, October 22nd, 2025, and the U.S. government shutdown is now entering its fourth week since it began on October 1st. This is making it the second longest in U.S. history. Now, the effects are rippling through financial markets, especially in the Treasury sector. With key economic reports on hold, traders are left flying a bit blind, which has actually helped push bond prices higher. Now, federal employees are also feeling the pinch. Civilian workers are set to miss their first full paycheck this Friday. And the White House, well, they have also warned that if the shutdown continues, it could soon affect military pay and even federal food assistance programs. And guys, with the airline delays and cancellations starting to pile up, well, some of us are hoping that public frustration might finally push lawmakers to reach an agreement soon. So let's talk about housing. The latest builder confidence report from the National Association of Home Builders, well, it showed a jump in optimism. Confidence rose 5 points in October to 37, which is the highest reading since April. And while it's still below the break-even level of 50, it's a clear sign that lower rates and expectations for continued Fed cuts are giving builders a bright outlook. In fact, expectations for future sales climbed above 50 for the first time since January of this year. As for mortgage activity, well, the Mortgage Bankers Association reported that purchase applications actually slipped just a little bit, about 5% last week, but they're still up 20% from this time last year, which is a solid sign of improving demand. Refinances, meanwhile, they rose another 4% on the week and are now up a staggering 81% year over year. And speaking of rates, well, they continue to trend lower. And according to the MBA, the average 30-year fixed rate dropped to 6.375, which is down from 6.42% the week before. That puts rates roughly at 1/8% below where they were about a year ago. So while the government shutdown is creating uncertainty, the housing market continues to show resilience, helped by lower rates and growing optimism among builders and buyers alike. So that is your Mortgage Minute for this week, everyone. Remember, if you do like what you're hearing, please like, share, and subscribe, and have a great week.